Good afternoon, CES. This is Dan Viza with Trillium Secure. And it's my pleasure to host the future of automotive insurance at the Trillium Secure booth. With the introduction of connected vehicles, electric vehicles, autonomous vehicles, and the new forms of mobility that they're spawning in the industry, it's unquestionable that there will be some implications for the insurers that are underwriting the risks associated with not only those new architectures, but the new forms of transportation modes. And it's the focus of this panel today to kind of dig into that set of variables and pull apart some of the ways in which data is both helping and throwing up new risks associated with underwriting the risks of the transportation industry. So I'm pleased to be joined on this panel by three notable dignitaries that represent quite a spread of diversity in terms of the nature of the companies and the nature of the parts of the insurance industry that they each represent. So I'm going to introduce each of them very briefly and ask them to give just a few minutes background on themselves as well as on the company that they're associated with. So I'll start with Mike Scrudato to my right here. Mike is Senior Vice President of New Strategic Markets for Munich Reinsurance. And I believe you focus on bridging between the startup world and the Munich Re business units. Can you tell us a little bit about that?
Sure. So we work with startups, we work with tech companies, and my focus area is on the future of mobility and how auto insurance products need to evolve to deal with mobility models such as ride sharing, car sharing, and autonomous vehicles.
Great, thank you. And to Mike's right is Benjamin Mahe. He is the head of telematics pricing and data science at AXA Direct in France. An engineer by training, as I understand it, so coming from the technical side, with a focus in your job currently on telematics and pricing as well as data science. Can you tell us a little bit about what you're doing there?
Hi. So first of all, thank you for inviting me here. I'm very happy to be here. So I'm working on everything where there is innovation and data in the French direct branch of AXA. And so one of my key topics is telematics. So we have an offer which basically requires our customer to plug an OBD dongle in their car. We collect data, and I'm in charge of all the analysis related to the risk and the pricing of this offer. And basically we are here at CES to understand what's going to be our next step. And so I hope to provide some insightful thought here.
Great. Thank you for coming all the way to spend time with us here. Last but not least, on the far right of me is Tim Attia, CEO and co-founder of Slice Insurance. Tim, also an engineer by background. Can you tell us a little bit about Slice and the part of the insurance industry that you're serving?
Sure. Slice is an early stage technology and insurance startup headquartered in New York City. We're 3 years old. We're focused on on-demand insurance, so trying to bring insurance into the on-demand world of experience, sort of like Spotify or Netflix or Uber world, but also focused on the new economy or the on-demand economy or gaps in the market. So some of the products we have is an Airbnb product. We also have an Uber product and also working on things like cyber.
Okay, so let's jump into the questions that I'll throw out there, and then we'll kind of bat them back and forth here, and hopefully give some interesting insights for the audience. So we'll start with data as a topic. And Benjamin, what sort of examples can you cite that of data that you're receiving in from vehicles, and how is that being used within the construct of the underwriting that you're performing as a firm?
So basically the way we use data at this stage is to provide usage-based insurance products. So basically we have tested at AXA a lot of different solutions to collect data, to be better at our core business, which is to estimate risk. And then we also use that to improve customer experience and engagement, because it allows us to be more I'd say to have a different relationship with our customers, to have more touch points than only paying for claims, to provide them feedbacks on their driving or even on their journey when they're riding a car. And so I guess these are the two main topics of interest for insurer on the data side. First one, be better at our core business, which is risk estimation, and second one, change the relationship we have with our customers.
Tim, your business is entirely dependent on data. Can you chime in on the types of data that you are ingesting in your services?
Yeah, sure. So we're using, because underwriting for us is not sort of a one-time transaction, we don't have a renewal. So we use the data, whatever real-time of signals and events we can get to underwrite ongoing in real time, particularly for risks that don't have a lot of actuarial history. So whatever signals and events that we can get, we try to gather and put algorithms behind.
So you brought up an interesting topic there about the different types of data. So real time is what I think I heard you mention, and then you also talked about uncharacterized risks that come with the type of insurance that you're underwriting. So Mike, maybe you can chime in on that from a person that interfaces with the startup community, but also back at the home office with the different business units. How do you deal with some of those unidentified risks or new risks that are coming about as a result of the availability of data indicating or providing insight into the presence of the risks? And are those insights indicative of the new architectures that these vehicles are responsible for, or is it coming about as a result of the way in which the vehicles are being used, or is it a combination of both? I mean, different types of risks obviously could be present.
Yeah, so some of the ways we're using data, it's primarily in the commercial fleet space. So what we have found by using some of the tools that Benjamin talked about, capturing that data, how, where, when are vehicles being driven, to identify the worst drivers in a fleet. Because traditionally when you're insuring a fleet, you're looking at the overall fleet's performance, not the individual drivers. And what we have found is that even the best performing fleets have bad drivers. And how do you take action to improve some of that driving behavior? The other way we're starting to use data is by looking at some of the historic loss information that we have, because we feel this is some insight into which types of losses are preventable versus not preventable from technologies that are here today. So for example, we've developed a proprietary text binding tool that looks at historic cause of loss information. And we look and read that cause of loss, determine which ones are preventable, and what types of technologies are available in the market today to help fleets prevent that type of loss. So it's very similar to a theme that I've heard here this week with autonomous driving and what's happening here. There's been a lot of discussion here in terms of driver assistance or active safety systems. That is technology that's here today that can help improve safety, save lives, and help us right to a better bottom line.
Yeah, let me unpack that a little bit with your help. So you're able to identify where some of these identifiable risks exist, and you can correspondingly identify technologies that are available that could prevent them. So what's the next step then that a company like Munich Re or AXA or any insurer can take to help implement that prevention?
Yeah, so the way we've taken that next step is we've run that loss detect analysis for, it could be a carrier, it could be an agent or broker, it could be a fleet, depending on which part of our business we're dealing with. Then we have established a series of technology partnerships with different types of technology solutions in the market. We work with the carrier, the broker, the fleet, everyone in that insurance value chain to deploy the technology, sometimes on a small-scale test implementation basis. Other cases, we've worked with carriers to sort of integrate the technology into their underwriting or to their risk assessment process.
Okay, that's awesome. Staying on the topic of data, and you're all ingesting various forms of data, presumably from various sources of data. How do you, and of course then, once you're taking the data in, you're doing something with it, presumably some level of data analytics in order to translate those bits and bytes into something useful. Benjamin, how do you assure the integrity of the data that you're ingesting such that you're not subject to the, bad information in, bad result out?
That's a complex question. So right now we have internalized a lot of steps in the process of collecting and gaining value out of the data. So we are confident that a lot of stuff, that all that we are doing is correct. But for instance, in some offers, an insurer would only get a score that's traducing the driver's risk. So you don't know how this score is computed by a third-party provider, and you just assume that it's correlated to risk, and then you would use that in your pricing and risk estimation. So we decided not to do that in order to keep control on how we use data and how we're doing scores that will impact in the end the premiums. And I think that it's kind of a paradigm that we should do as much as we can. That is, keep control of the integrity of data by keeping it ourselves whenever it concerns our core business. But then at some point we're going to have to face the issue that the more data we're going to ingest, the more third parties will have to provide the data, be it sensors provided by whoever, data from the cars directly. And so we'll have to face more and more that kind of issue. But at this stage, we decided to keep control of the data directly.
Tim, what's your view on that?
Because we're trying to be digital, and for our definition being no people in the process, identity becomes an issue, right? So how do we identify an insured? How do we identify a risk? How do we identify an activity? Is it real? So I think that that's a difficult one, because in a full digital environment, if you don't get good data in real time and you're identifying people, a risk or a person, online, it becomes difficult if you're not getting good data. So we're always trying to find good data, and the problem, of course, is there's not enough data. So there's not enough to know whether it's good data or not. Yeah.
So is it fair to say that each of you are taking receipt of data without any certainty of the origins and the authenticity of the data? Do you take it on trust?
I think here's the thing. The data sources now are better than the data sources we had yesterday, even if they're in that situation. I mean, if you look at some of the data sources the insurance industry has been using traditionally year over year, this is better. So that's
better is in what sort of
more accurate. You can look
higher
at
fidelity.
risks down to the actual individual risk, not as a group. You can go further. So it introduces some problems, but it's better than some of the existing.
Yeah, I think an example would be a smartphone app. That they have improved immensely in the last 2 to 3 years, to the point where they're not substantially worse than a dongle. But still, they occasionally miss trips. They occasionally get things wrong. But it's still accurate enough to assess who is a good driver, who is a bad driver. Okay. And, really, what we do is whenever we are working with a new technology partner, data source, obviously we do our testing, make sure we're ingesting that correctly, make sure we can get it into our environment. But accepting the fact that even if you have a smartphone app that's capturing 98% of the trips, that's still much more transparency into what's happening in that vehicle with that driver than just getting.
The data up to a certain extent is okay, then we're fine with it, but we might have an issue when we're talking about data that will allow us to prove responsibility on a claim, for instance, aspect. For instance, suppose you have a L3 or L4 car, and you have a crash, and the driver tells you that the adaptive cruise control was on, and so you don't know whether the client is lying to you, whether he had done something wrong, or whether the car really has an issue. And when the insurer is going to want to collect the data, he won't be able to get anything out of it, because we don't know for each and every model of cars that are in the market right now, how to interpret motor data, all the sensor data, and only car makers will be able to do that. Even the government, police and so on, they will not be able to do that. You don't have any expert that's able to do that besides the OEM. So I think it's going to be an issue where we're going to have to, we're going to have to trust somebody, and I think there we'll have the issue of integrity of data and what it really means.
So what I've heard thus far is that the data is generally of better quality, higher resolution, but you don't yet have as much data as you potentially could have with the unprecedented amounts of data that connected vehicles, electric vehicles, and autonomous vehicles clearly can be generating and providing. So what's limiting the availability of that higher resolution, higher frequency data?
So again, very complex subject, because first you kind of need to get the data out of the car and provide it to third parties that wants to do something with it, a service, a product, whatever. So to get the data out of the car, you have one concept that's been pushed by the car makers, which is the extended vehicle concept, which is that everything that happens in the car remains in the car, and the only person that can interfere with the car is the car maker. So every third party that want to have access to the data will have to ping the car maker's servers that are out of the car. So you ping them, you get the data, and obviously not all the data will be available there because of issues on the telecommunication side. But okay, once you get the data out of the server of the car makers, then the issue is going to be around price, availability, setup, normalization of the data, because obviously car makers are currently in a mode where there's a lot of IP in what can get out of connected cars, and they won't share anything with each other. So as a third-party provider, we'll have to be able to interpret data that's not normalized across cars and even models of the same car company.
But there could be an answer to that. But just think about today, though, before we get to the potential answer. Today, you go online and you fill out a form that asks you what's the make, what's the model, put in your VIN. Like literally, that's the standard that we're using. We ask our consumers, our customers, to fill out the information. Right? We don't. So even on HomeShare now, we don't ask any questions because we go get it ourselves because it's better than asking. But remember, that's a standard now. The standard is we're not even close to getting the actual stuff on the car. We're asking people to fill it out. And we need better, we have better data than that. Right now, our rideshare product, we use a mobile device in the car because that's the best we can do right now. But in terms of, if you turned it around and you said that insurance was a SKU in the car, then you would be part of the car and therefore would have access to the data. And you've got lots of processing power in the car.
Yeah, but then it raises a complex question, which is related to fair competition. Because if you mention that insurance must be in the car, then which insurer, and what do you do about competition among insurers? That's, I don't think it's...
By the way, the regulatory stuff is a big problem because the decision on liability rests with the courts. And the courts only know pretty much how to make a person liable so far in terms of statute, right? I mean, the liability, well, there's product liability also currently with cars, but not in the same sense. So the courts are going to have to, but yeah, I agree with you. There's a regulatory hurdle to that happening, to it being embedded in the car.
Yeah, and there's even for us a competition, because I'm convinced that if the insurance is embedded in the car, then the car maker will basically provide their own insurance product, or I don't know, the insurance product of the insurers they partner with, so that they will basically try to decrease our revenue and increase theirs. So I'm not sure it's good for the insurance business, to be maybe frank.
Yeah, I mean, just to jump in, we're talking about embedding insurance with the car. OEMs are starting to do it already with a car subscription model. Third parties are starting to do it where,
The monthly subscription.
yeah, so a monthly subscription does embed the insurance with the car. So we're gradually getting there. You know, yes, there are regulatory hurdles to get there, but these new mobility models are pushing us in that direction.
But the insurer still has the opportunity to own the ecosystem. I don't think you have to give up the ecosystem to the OEM, because a car needs to be fixed, it needs to be serviced, it needs, you know, people that can, you know, there's a lot of things that insurers are very good at managing in an ecosystem around a car. But again, you know.
Yeah, again, I don't really agree. No, because you mentioned the car needs to be fixed. And actually fixing the car is a big issue right now on a regulatory standpoint, because a car maker will want the car to be fixed on their approved car repair workshops, and it raises a problem for independent repair workshops that are kind of pushing the regulator to oblige the car makers to give them more transparency, to give them for free the data and so on. So I'm not sure where we're heading, but what I agree with you is that regulatory standpoint will be a big part of it.
Big hurdle. But you also mentioned earlier that you're focusing with your data on customer experience backwards, trying to meet more customer engagement. I don't know if we're ever going to make buying insurance a good experience, but people want to own that car behind us, right?
Yeah.
And so if you can make yourself somehow part of that experience, then you can maybe move insurance from something that has to be purchased to maybe to something that's sold. If it's part of a broader experience, and that would be based on data and signals and being able to be part of a moment and an experience.
Yeah, I agree on that one, but to me it's different to be part of, you know, this, and to have to be, because when you mean insurance is going to be integrated in the car, I'm understanding first mount, so I'm understanding, you know, only one insurance product per car, or one insurance brand maybe per car, and what I think is there's like room for everybody, just pings out and pings in the car, you know.
So lively debate, that's what we like to see here. But maybe moving on just a little bit into the, you know, the business model question here. So how do these new architectures and new mobility services impose themselves on today's insurance models? Okay, and maybe I'm going to direct this to Tim, being out there, I'll say on the edge of you know, the digital domain. How have you considered the creation of your company to address, you know, this new environment where where we're taking in the data, there's larger amounts of data, higher resolution to the data, and it's creating presumably the ability to start to partition down both the risks but also the coverage and the durations of the coverage that you have. But can you just kind of pick up on that and talk about how you've gone down this path from a Slice perspective?
You know, I think we have to leave the traditional models behind, and we have models of line of business or commercial versus personal, and line of business where, you know, we only have an auto product, and you can ask us anything you want. We've got an auto product, and I think it has to move away from that to what are the specific risks we're looking at, and can we build to those specific risks. We already talked about change in business model, but I think that just doesn't fit in that model, and so as a result, I think the main part of the change in the model is going to be the need to remove expense from the model. For a digital product, it's not going to be acceptable to have a very high expense built into the product. By the way, I think the product can actually be more expensive, but we're not going to be able to build the same kind of expense in the model, which was going to necessitate a new model. I don't know if that makes sense.
You know, I think the biggest change in business model is that if you look at new mobility models, you know, we spent a lot of time talking about how do you get the data. In a new mobility model, you're talking about car sharing, ride sharing, autonomous vehicles. The data is a given. You know, because if you look at an Uber or a Lyft, get around, you know, their app-based platforms are capturing that data on every ride that's taken. An autonomous vehicle is generating terabytes of data, and if you're not building that data into your underwriting process for these new mobility models, I mean, you're out of the game.
Are those
So-
ride-sharing services that you just noted, do they share that data?
Sure. I mean, when the platform products we have, which I think are a little bit different, what Tim talks about when he talks about his Uber product, but the platforms, that period 2, period 3 coverage, we're doing that based on the data we're getting from them.
Got it. Got it.
And if I jump in, I tend to agree with Tim that we may even sell products more expensive, but what I think is going to make the difference too is the kind of individualization of the products, and it goes with the new forms of mobility. And tomorrow, right now we think that the premium changes with the driving behavior. Tomorrow it's probably going to be the product that will change with the driving behavior.
And we tend to like to underwrite stuff you own, and you're not owning it anymore. So that changes the model. It's more about you, and so I think that changes it as well.
So we've been kind of dancing around and touching on autonomous driving, level 3, level 4, et cetera. But how does does it fundamentally change the nature of the ownership of liability? And if so, in which direction does it move? From the OEM to their suppliers, or where does that liability, where is it heading?
So, we are underwriting autonomous vehicles today. We insure over 20 autonomous vehicle developers here in the U.S. market, and the way we look at it, it's our insurance products will evolve as the business models, as the technologies evolve. We want to make sure that insurance is not a barrier to the adoption of autonomous vehicles. And when we look at how that liability evolves, we think obviously there is a drift toward, away from traditional auto liability, more toward a product liability type product. Cybersecurity becomes increasingly important. And how this plays out, look, everyone has an opinion. No one's really sure until we actually have some cases legislated in the courts. And, there is one very extreme, and it's a pretty boring example of how it plays out. There's just more subrogation of claims. And a subrogation, for those of you that don't see it in the insurance industry, it's when the claim is settled very quickly for the insured, and then the carrier goes after the ultimate responsibility. So, for example, if a braking system fails today, that claim is settled very quickly for the owner of the vehicle, and then it's up to the insurance carrier to deal with, the back-end corporate responsibility. You could say the same thing potentially about an autonomous driving system. It's not the most exciting or the most dramatic outcome as to how this evolves, but it is one that shows like the insurance framework that we have around liability today, is pretty flexible when it comes to these matters.
Did you have a view, Tim?
That's what I see too.
I think we're going to have to look at underwriting a little bit differently as well, in the sense that we don't have 10 years of actual, loss history, and so it'd be better if we could respond to more real-time risk signals, not just actuarial history, and learn how to respond to more, because there's not enough data. We don't know. We don't know until there's enough time, enough miles.
So Mike, you touched on a topic that I hope that we would get to here eventually, which is the topic of cyber insurance.
That's shocking, being in the Trillium
Go figure. So is it? Are any of the insurance carriers out there underwriting cyber threats or cyber risks for transportation today?
There is silent cyber coverage today.
What does that mean?
I mean, if a car is hacked and it crashes today, but you don't know if it's hacked, you're just going to think that's a crash, and so there, it's very difficult to say if something's,
In other words, it's not explicitly excluded today.
Yeah.
So
Thank you.
Yeah.
It's
so if it happens, arguably it's covered.
no, thank you, Tim. But I look at it. If you look back 15 years ago, there was no cyber insurance for businesses. what I call traditional cyber. Today that's a $3 billion industry. So you've gone from a zero to $3 billion industry for traditional cyber. And I think we can say there's a growing cyber component to auto. And at what point does the silent cyber explicitly get excluded or then covered under a separate product? I think that is one scenario that you could see playing out as this becomes more connected, more autonomous.
You guys have a view on that? Any different? Anything to add?
Yeah, I tend to be agree that it's probably going to be a big market. Right now, we are not. I'm not talking about the AXA group as a whole, but on traditional motor insurance, we are not. When we insure someone, we're not especially mentioning cyber risk or whatever. So I guess we did not have the case in France, but we would cover it. And then it's gonna evolve, and it's probably growing and growing. And the question you asked earlier about integrity of data and so on is gonna be very important in these cases too, because insurer may or may not have the expertise to understand whether there was a real hacking or not. So again, we're gonna have to evolve and get prepared for, and follow the trends to be able to propose products that will make sense in the future.
Yeah, and I think in a product that's using real-time signals and events. So if we're looking at a small business insurance, let's say you're looking at small business cloud insurance, it's reasonable to say that you would want the insured to have endpoint monitoring software, because then you can know how many endpoints there are. You could vary your pricing based on endpoints. You could force them to use security and protection. I would think we would go down the same path. We have a personal data protection product that we look at for our rideshare product, and we go down the same path. This is the plug for Trillium. we would expect them to have the right amount of protection, because otherwise our partners won't write the insurance, right? And then you also need the signals. You need to understand how that varies based on what's going on, right? So so I think that that it goes hand in hand, that you're going to need some way to be able to secure it and get the signals, and there's going to have to be a way for you to protect the data of the individual.
That's awesome. So we've got just a few minutes before we wrap up and take some questions from the audience. But so I want to kind of jump a little bit further into the what's coming in the future. So Mike, why don't you just start off by telling me what's the thing that keeps you up at night, and what's the one thing that you would like to most what capability would you most like to have available in order to provide a better outcome for one of your business units as it relates to data and connected data?
It's really something we've already talked about. It's availability of data, and I think we're at a stage right now where it's becoming increasingly a part of how we do business, and what data is out there. Where can we find new data sources, better sources to understand risk, get more of that, transparent, real-time pricing.
Tim, Benjamin, yourself?
Yeah, I guess it's pretty much the same answer for me. It's access to data, because I think, to have, better, but then to fuel these algorithms, we really need data, and data is what really is at the core of the game here. So that would be my answer too.
So Tim, what keeps you up at night, and what would you most like to have available?
Yeah, so as a startup, we're a year from being out of business by definition. These guys aren't. So speed's a real issue for us, right? So we walk around the floor here and things aren't going fast enough for us, right? So if I want to insure these cars, there aren't enough of them on the road for us, right? Is there some way to translate this to what is on the road today? Is sort of more imperative for us, because we don't have 15 years or 10 years, or will it ever get to level 4? I saw the CEO of Waymo talk at WSJD, and I'm pretty sure he said we're never going to get there. But we can't wait. So we have to find answers where there are markets today, and there are markets today. There are things going on today where I think all of this stuff can help out before we get to the end game.
All right, so last question for each of you is probably one of the biggest topics that's landed on our collective laps this past year, and that's the treatment of personally identifiable information and the new regulatory regimes that have come about as a result of that. In Europe, it's the GDPR. In North America, at least in California, it's the California Consumer Privacy Act. Undoubtedly others to follow on in other jurisdictions. But what's your perspective on, from the insurance perspective, on how to ensure either how to ensure the risks associated with your clients' use of personal information if you're dealing with commercial enterprises, or conversely, if you choose, how do you treat personally identifiable information in your business, and how do you protect it?
So what I think it does is it raises the bar on how are we delivering more value with that personal information. We've talked a lot about getting people to give us access to driving data, and at least in the U.S., it's been a challenge, and yet consumers readily give away tons of personal information through their smartphones on a daily basis because they feel like they are getting some value from that. So I think what's incumbent upon us, not just to protect that data, but if we are going to collect it, is to deliver more value back to our customers.
So I'd say that this adds up complexity in the game of the data, and obviously our job is more complex because we need to be compliant with GDPR in Europe and all the regulations that we have to be compliant with. But if we go a step further in maybe 20 years or something, I think it might evolve with regard to cultural acceptability, which is like in Europe we might have an answer which is going to be different from the US and which is going to be different from China, depending on whether customer and data privacy driven, maybe more business driven, or more like interest of the state driven and innovation driven. So I think we're gonna have an equilibrium that might be different in different regional areas.
I think insurance, whether or not people view it that way, they've been pretty good custodians of data. Have to be compliant with GDPR because that's what's imposed. But I don't think insurance have been bad custodians of data. The problem then becomes once you have all this data, and I think might be your next question. Once you have all this data, what do you do with it? Insurance inherently isn't fair. The good risks, by definition, fund the bad risks. That's how it works. So if you start to weed out the bad risks, first of all, who's going to insure them? So if these guys don't insure them, then the state has to pick it up because somebody has to. Attia went to the states. Some cyber might go to the state, not to the insurers. Somebody's going to end up picking it up. And so if you start excluding people, it becomes a problem. And it also becomes a problem, I think, if the good risks don't fund the bad risks. So if you find out somebody, our CTO the other day had our app, and our app is using another partner to look at your driving behavior, and that day he was 99% illegal or whatever, right? So if you find that out and you exclude him, somebody's got to insure him. It ends up being the state. And so I think being good custodians of the data, I think the insurance industry should step up and say we've always been good custodians. The other part of it then is, okay, well how are you going to work? How are you going to deal with the data that you do have?
Great, thank you for your response. Well, it looks like we've got a standing room only crowd here with probably a few questions scattered amongst them. So let's open up for questions.
All right, you guys have been talking about data, and more data, and talking about a little bit about risk. That's kind of leading into what I wanted to ask you. And you said you're part of a startup insurance company right now. And we all know how quickly insurance companies move. I guess my question is, how do you take all this data and quantify risk quickly so you guys can make money and others in the ecosystem can make money?
Well, the way that our hypothesis is too early for us to know whether what we're doing is successful or not. But our hypothesis is rather than the traditional insurance, which is I go through this step called bind issue, where I underwrite you and it's expensive to underwrite, so I need this step, and then I never get to underwrite you again, and I have to. So I create this artificial thing in the future called a renewal. I'm going to underwrite you in a renewal, and that's not obviously acceptable in the new world. So I think underwriting has to be something that becomes real time all the time. It's a process that's always running and always, I know you don't like scores, but always scoring the risk, the individual, and the activity, and therefore it can react in terms of coverage, it can react in terms of prevention. Prevention is, it's all about protection. Insurance is only one of the ways to protect you. It can work in terms of prevention. But I think we need to move away from insurance being offline and static to being online. And a good example is the auto policy. They ask you where your car is garaged, your house. Well, if the car is moving all the time and you know the longitude and latitude of the car, therefore the policy is moving all the time. So we don't need to store policy images anymore because the policy is moving. Then you can risk rate the road. You can not just look at what's coming out of the data. You could look at, risk rating the road. Are you driving past a tavern? Are you going past, what's the weather like? But as soon as insurance becomes real time, then we're good.
And I would just add to that, the other component is what technology is on the vehicle. I talked about we're looking at these preventable losses and what type of level 2 automation or driver assist technologies can help prevent those losses. And I think that's part of the new paradigm, not just auto insurance, but insurance. It's how do we get into the game of not just responding after the loss, but how are we helping to prevent the loss from happening in the first place?
So are there ways to enhance efficiency for claims handling that involve connected vehicle data?
Yes.
Do you mind elaborating on, how the process would be, more sped up or better handled?
I think and I'm sure you have thoughts on it, all that the one example is first notice of loss. If you have a connected car, it detects a crash and sends a notification to the carrier. That's an advantage. There's statistics that show the longer it takes a claim to be reported, the higher the loss tends to be to the insurance carrier. So if you get a faster first notice of loss, that's one benefit. I think there's probably others.
Yeah, and I was gonna say also so maybe two things. The first one is if the sensors of the car are able to provide you with the strength of the impact, then you might be able to direct your car to a given car repair workshop who has the ability to deliver the service. And if we go a step further, sensors might even be able to provide you an estimation of the cost of the claim, and so you might even trigger a payment to the customer saying, okay, you just had a crash which will cost you $10,000, so I'm just gonna give you the
There's a breach, so you could theoretically just pay, and so you bypass the whole claims process.
Okay, well, thank you so much for participating in our panel, and thank you to the audience for excellent questions. Thanks, guys.
Thank you.
Thank you.